Gang.com and Phil's Gang Radio Show. Please, during this programming, would you hit for me, subscribe, like, and share? I'd really appreciate it. Okay, so this is a short week going into Thanksgiving. And when you have a short week, that means lighter volume, and that means stocks usually rally. Okay, now, what's going to happen is, if you look at this chart here again, we've had all these failures, okay, right here. These are failures. So, and I've talked about this before with you. We've had this failure, this rally, then it failed. Rally, then it failed, rally, and then it failed. That's a big deal right there. Now they're trying to do the fourth rally. So the point is, why would we be so lucky to think that the fourth rally is going to be any different than the other previous three rallies? It's not. Because what they're not telling you, they're telling you how in this rally here, and they'll do anything to try to break this rally out. Because they always do that heading towards the end of December, because this is big bonus time on Wall Street. Okay, and they're lagging this year, so they're going to do anything to try to get it up through this tremendous resistance. Remember, when it hits and fails, that's because you got tremendous resistance. Same thing happened with Enron, if you recall, back then in the S&P. When the 200-day moving average is above these, when you have the S&P and the 200-day moving average is above, okay, you got a real problem. Not only can't you get up through the resistance of the 200-day moving average. Here, let me just show you. I'll just put it in red. Or here, I'll do green. So here, so the 200-day moving average, remember, supports a stock. So it was supporting this beautiful rally all the way up. Then it turned and doesn't support it anymore. It puts tremendous downward pressure on a stock, okay? And to try to get up through this 200-day moving average is nearly impossible. You need either terrific earnings, which we don't have. You need capitulation, where investors finally get fearful and they throw their stocks away. Get me out, especially margin calls. And then people like myself go in and steal those stocks for nothing. That's when you have a real nice base in the market. That's not going to happen. Because why? Because we got all this crap going on from these a-holes, okay, who on TV keep telling you every day how strong the consumer is. Well, he's not strong. Your consumer is not strong. First of all, the reason we can't break out, and the reason our trend doesn't look like this anymore, this was all with remember, this is when they did QE. This is when the Fed dropped its Fed rate to zero. So the Fed was loaning your money interest at zero, and they could loan you on a car very cheaply or on a house or whatever. Those days are over. So look what happens when you don't have QE. Look how tight this is. Look how wide apart this is. So without QE, and they just can't say, okay, we're out of QE now, and we're just going to go back up, and we'll continue our rally. It doesn't work that way. You got 13 years of stocks that are overvalued. You got 13 years of about $122 trillion that's in the system that's got to be taken out. You got to take that money out. And the only way you can take that money out, okay, is by raising rates. You're not going to raise rates 4 or 5 times. You have to do what Volcker did. He raised the Fed short-term rate, the rate that he loans banks money at, from 4% to 20%, and he broke inflation. We've gone to 4%, and now everybody goes, oh, that's it. We broke the back of inflation. No, we didn't. And the fact is, not only do we have that problem, but we got the problem that all this retail that's going on, and it's going to happen for Christmas here, Black Friday and all that, is all BS. It's all bullshit. Because why? Because think about it. How are they getting the money to buy this stuff? Well, during the pandemic, they got the money from the government. The government gave them everything. They had people that had to pay their mortgages, people that had to pay their rent, they had to pay utilities. They were throwing money at them left and right, child care support, child tax credits. They threw everything at them. Here, Here we are, communist China. Here, have everything. We're going to take care of you. People are just saying, hey, I'm not going to go to work anymore. So that's over. And savings went up to 32%. People stayed home. 32%. But that's gone now. Savings are negative now. It's 3.1%, not 32%. So people continue to go, and they took refi. We've had historic amount of people going in and taking money out of the equity of their homes. This is crazy. So we've had refis in 2021 of 1.2 trillion. The year before that, we had refis of about, I think it was something like I don't know, it's small numbers, like 750, something like that. But 1.2 trillion. This year, here, 2022, it's going to be even more than 1.2. So they're buying stuff by going into debt. And the credit cards, the credit cards are tapped out almost near 1 trillion. So between the credit cards tapped out, between the refis pulling money out of their home, that's how they're buying stuff. So that's the problem. And that's why I believe in the short term, we're going to rally through this holiday. But in the short term, what I think is going to happen is we're going to come all the way back down. We're going to hit that 200-day moving average, just like this did, because nothing's changed. Matter of fact, things got worse. And we're going to come all the way down to meet that low right here. Okay? And then it's going to go below that low. That way there we can get fear in the market. That way there we can get capitulation in the market and clean out all this crap we have to get rid of. So that's it. So that's how it works. Okay. So again, 200-day moving averages, okay, are nothing to screw with. And when you got the 200-day moving average supporting it, you're in hog heaven. But boy, when the 200-day moving average is like this, and all there is debt to buy stuff, and there's no earnings, there's only one place for the market to go. All right, take out this low right here eventually. The only way they could rally it, go back up again, and continue with this rally right here, if they did another QE. But inflation would put us into a friggin' depression if they did that. Okay, so that's about it. So I'll see you on the charts again tomorrow. Again, I'll give you my updates and my honest opinion of what's going on. So please stop listening to these bullshitters like Kramer and the rest of them, okay, who only care about their advertisers. They don't care about you. Their job is to make you feel good, go out and buy something, or they don't get their advertisers, okay? And if they don't get their advertisers, it's not on TV. That's what it's all about. They take care of their advertisers, not you. Here at Phil's Gang, we take care of you. And by the way, why don't you go join my gang for 10 days free and learn how to use the color-coded chart, which tells you when to buy, when to sell. This protects you so much that you don't have to pay anything for 10 days, and you'll see how you'll learn to short. If you don't learn to short, then you're going to continually be 80% of the investors who lose money year in and year out. You've got to learn how to short. And that tool is designed to do that, as well as to how to buy a stock correctly. It's color-coded. Okay, see you on the charts.